I'm Nick Kelly, Head of Listed Investor Relations for Charter Hall. I'm here today with Anastasia Clarke, CFO of Charter Hall Group, ticker code CHC. Hi, Anastasia.
Hi, Nick. How are you?
I'm good, thank you. Anastasia, it was a strong market reaction to the results in Charter Hall Group. Can you take us through some of the highlights?
Well, I think the real market reaction is that whilst we had foreshadowed that valuations were no longer falling, the 31 December result for Charter Hall and for the A-REIT industry is the clear evidence that all sectors have actually gone up in value. We've seen a real turnaround, with the exception of office with some lagged effect. Charter Hall, very important because it underpins our funds under management revenue growth from here.
And I saw a very positive news item in terms of the earnings upgrade. We were previously guiding to OEPS of 79 cents per security. It's been upgraded to 81 cents. The market's reacted strongly to that. What's been driving that? Why were we 79 and why are we saying we're 81 cents now?
Well, look, like you said, and like the market's reacted, we've had a very strong first half result. Essentially, the market was thinking that valuations would keep coming down and our FUM would come down, but what's happened is it's gone up. We've had good equity flows at $1.6 billion. It's basically double the pace of FY24, and that's underpinned funds under management growth and underpins the upgrade to earnings.
I also noted in the results pack there was a chart showing the long-term history of the dividend that's been distributed from Charter Hall over the last 10 years. The dividend has more than doubled when a lot of other REITs in the REIT industry, their income's broadly similar to where they were 10 years ago. So how can Charter Hall get to this level where it's doubling its income return to investors over the last 10 years?
It's a good point. Look, Charter Hall is a two-part business. It invests in real estate alongside our investor capital partners. And then it also manages that real estate. And the scale of the growth with those combined capital pools has meant that we've been able to drive profit margin increases significantly over the past 10 years. So we've just reported well over 80% profit margin. And if you go back 10 years ago, it was well below 60%. We'll continue to do that as we drive organic growth through scale in the core sectors that we're in, principally office, industrial and retail.
Gross equity inflows to the funds management business were over $1.6 billion over the last 6 months, when at the previous results for 30th of June last year, it was the same amount over a whole 12-month period. It's obviously accelerating. Can you give us some information behind that?
Look, yeah, the last 2 years in the real estate cycle have been undoubtedly very tough. But what you've seen is some clear evidence at the half where valuations have stabilised, they've hit a trough and now are increasing. You've also seen the RBA come out and cut interest rates. So we've got the indicators of an inflection point, and come with that is then evidence that it's a cycle turn. So we've had a cycle and we'll now go into the upswing cycle. And with that, you will get accelerated attraction of equity to want to get deployed into investments, because this is the period where you'll generate the highest rate of returns.
Okay, thank you, Anastasia. Thanks for your time today. And if anyone has any questions about Charter Hall Group or any of our listed REITs, please feel free to contact us.